Hello friends, in the series on the income tax cases, today we will discuss a very unique case in which a very different type of issue was before the Honorable Mumbai Ι.Τ.Α. and the issue was related to the charging of the surcharge, and the issue was that the rate of surcharge is whether applicable according to the rate of income tax which is applicable to the assessee or according to the slab of income in which the assessee falls. This issue has been taken up by the Honorable Mumbai Ι.Τ.Α. in the case of Araadhya, Jain Trust versus Income Tax Officer. This case is reported in 126 ITR at page number 1 and the date of the judgment is 9th April 2025. To understand this case, we have to first of all see that there are three sections which are very important for those cases where the income of the assessee is to be taxed at the maximum marginal rate, and those cases are where the shares of the beneficiaries is indeterminate or the shares of the members of the association or body of individuals are not known. Section 2 clause 29C talks about maximum marginal rate. Section 164 talks about charge of tax where share of beneficiaries is not known, and section 167B talks about charge of tax where shares of members of association of persons and body of individuals are not known. In the present case, the assessee was a private discretionary trust, and for the assessment year 2023-24, since the shares of the members were not known, so the assessee has paid the tax at the maximum marginal rate even if the income of the assessee was below 50 lakhs. When the CPC processed this return, the CPC found that since the assessee has paid the maximum marginal rate tax on its income, so the CPC calculated the surcharge at the highest rate of surcharge, to which the assessee objected by saying that the surcharge is not to be levied according to the rate at which the income is taxed, but it should be levied only when the income of the assessee is exceeding 50 lakhs. Since in the present case the income was not exceeding 50 lakhs, so the assessee said that in the present case the surcharge is not applicable to the assessee, but to talk about the surcharge at the highest slab. But the CPC didn't consider the submissions of the assessee, and when this matter was before the CIT appeal, the CIT appeal also said that since the income of the assessee has been taxed at the maximum marginal rate, so the surcharge is to be levied at the highest rate of surcharge, and CIT appeal dismissed the appeal of the assessee. When this matter was before the tribunal was also of the view that since in the assessee's own case in the earlier years, the tribunal has not considered the appeal of the assessee, and according to the tribunal also, when the private discretionary trust has filed the return of income according to section 2 clause 29C read with section 167B read with section 164, according to the tribunal also the surcharge is to be levied. But the assessee said that since different tribunals have different views in this regard, so this matter should be referred to the special bench. And when this matter was referred to the special bench first of all was of the view that the press note dated 1st December 1965 expresses that the slab refers to the income and not the rate of tax. The tribunal further said that if we also pursue section 2 clause 29C that talks about the maximum marginal rate, that also refers to the highest slab of income. The tribunal said that even the circular number 2 of 2018, which describes the memorandum of the Finance Act 2017, also used the expression slab to denote the various categories of income and not the maximum marginal rate. So the tribunal was of the very considered view that the surcharge is to be levied according to the income of the assessee and not according to the rate of tax. The tribunal said that even in those type of incomes, even if the income of the assessee is exceeding 50 lakhs, but the income includes dividend income, in that case also the surcharge is levied only at 15%. So it is very clear that the surcharge is based on the nature of the income and not according to the maximum marginal rate. So the tribunal deleted the addition of the taxes which was made on the basis that the private discretionary trust was liable to highest rate of surcharge. At the end of this video, once again I am repeating the name of the case. The name of the case is Araadhya Jain Trust versus Income Tax Officer, and this case is reported in 126 Ι.Τ.Α. Tribunal, page number 1, and the date of the judgment is 9th April 2025. Thank you, friends.